Before we get too far down the path here, I want to mention that this series of conference calls, and many of you have tuned into many of them, is sponsored by BMO Harris Bank of Janesville. We appreciate their sponsorship, and I'd like to read this short message from BMO Harris. BMO Harris Bank is your financial partner that understands your business, your industry, and your market. From financing solutions to advisory services, their team of local experts will work with you to deliver the services you need when you need it. BMO Harris Bank has deep roots in the community, and they're ready to help you and your business explore new possibilities. You can visit bmoharris.com/commercial. Again, we thank BMO Harris for their sponsorship of this series of conference calls. Today on the conference call, we have 4 panelists. Michael Johns is the Managing Director with BMO Capital Markets Food, Consumer, and Retail Group in Chicago. Michael Antonelli is the Managing Director and Equity Sales Trader at Baird, where he covers international clients. Steve Lair is the Vice President of Operations Support for Quick Trip Incorporated, and he's also Chairman this year of the WMC Board of Directors. And then finally, we have Gail Price, the City of Janesville Economic Development Director, who we hope will provide a more local spin on everything. I need to ask our tech director, Lindsay, if all the panelists are on the call.
We are just waiting on Steve. Everyone else has called in.
Okay. Well, with that, I think what I'm going to do is hope that Steve finds his way onto this call. And then I would start the call and give the floor to Michael Johns, the Managing Director of BMO Capital Markets Food, Consumer, and Retail Group. Michael, perhaps you could spend a few minutes and offer up your perspective on the outlook for 2021.
Sure, happy to do that. Thanks for that introduction. And I would say we've turned the page on 2020. It's finally over. We still have 2021 to deal with, and I think a lot of the same themes that we were dealing with in 2020 are going to carry forward in the first half of 2021. Meaning, how quickly, how broadly our vaccine is going to be distributed. I do think what will wind up being different in sort of late first quarter 2021 than 2020, it may sound very simple, but simply the return of spring and summer weather to those of us north of the Mason-Dixon line, I think will have a substantial impact on getting out, on how we feel about what's going on. And so I do think that'll be a natural improvement. It may be short-lived. I hope not, but I don't think we should underestimate any of us the fact that when COVID started in 2020, we were already headed into spring and summer weather. We didn't have to live through a winter of COVID, really. And so what we're experiencing now is something that we just didn't experience or didn't have to deal with, I think, last year. And as we return to March, April, May, I think things will feel differently. Hopefully they will be different with the vaccine, et cetera. But we shall see. What happened in 2020 were obviously major shifts from a retailing perspective. Foot traffic plummeted early on in the pandemic and hasn't yet recovered. We've seen estimates that foot traffic across, broadly speaking, retail is still down 15+%. It was down almost 50% in April. So it has recovered, but hasn't really gotten back to where it was. Obviously, a massive shift to e-commerce. In 2019, e-com for retail was, call it ballpark, $600 billion. It's pushing $800 billion by the end of 2020. So obviously a pretty massive increase. And I think we all see that, we all feel that, we all understand that. What may be less intuitive is that that's only 20% of retail sales. And so 80% of that retail spend is still going through a store or going through, sort of non-e-commerce, non-direct-to-consumer retail. That's all blurring as we deal with buy online, pick up in store, or some other elements which cause nuances. But I think if you were just to read the headlines, you'd assume that 80% of retail was e-com, not just 20%. So that's an interesting perspective to keep. We did see in 2020 a continuation of pretty seismic store closures. We still saw net in retail over, about 5,500 net closed stores, about 8,700 stores closed, about 3,300 open. So I'm talking about the net number in 2020, and that was above the net number that closed in 2019. I think we'll still continue in 2021 to see net store closures. But my final comment, and I'll hand it off to other panelists or continue on in a different direction, is that the situation I think we face in retail in 2021 is very unique compared to eras past, because sales are so far down for so many retailers and because so many stores were closed for so many retailers. The questions that they're asking themselves now are very different than what they have previously asked themselves. Previously, I would say prior to the pandemic, retailers asked themselves the question, which stores should I close? How much promoting do I need to do to drive sales? Now I think the questions are, which stores am I going to reopen, and am I going to need to do any promoting in order to drive sales? I think there's an opportunity for many retailers to just simply not open unprofitable stores, poor performers. I also think there's an opportunity for retailers, given where their inventory levels are at, to not get back on the hamster wheel of promotions, which may have destroyed or at least diminished brand value at a number of those retailers. So things will be different, but I think the questions that retailers are asking themselves and the questions that they'll be answering in 2021 are actually probably easier and better questions for them to be asking themselves than they were prior to the pandemic. I think we'll wind up seeing, my belief is, I think for those that do survive, I think we will see a much healthier retail environment, both stores and e-com, after the pandemic's over.
Well, thank you. I expect we'll have some follow-up questions. There's a lot to unpack there, with especially the e-commerce, the pent-up demand. There's all this talk about pent-up demand. I'm not sure anybody can measure that accurately, but we'll get to those questions after we've had all of the panelists speak for a bit. I'm going to turn now to Michael Antonelli, the Managing Director and Equity Sales Trader at Baird. Perhaps, Michael, you could give us a perspective on the investments market.
Yeah, I really appreciate the talk here. And as just as an aside, in my current role, I am now a market strategist in Baird's Private Wealth Division. I speak with our Private Wealth Division about markets and the economy. And my current deck is called 2021: The Economy Strikes Back. And I got to tell you guys, I am certainly bullish on the economy this year. How that relates to the stock market, we could do a whole panel on that, because just to let you know, the stock market is not the economy. Last year alone proved that the stock market can and does do things that just continues to shock people. We had all-time highs last year in the middle of a pandemic and a recession. So let me just give you a quick couple minutes on how I view the economy shaping up this year. I am one of these people that tends to be hyper laser focused on the consumer. I think that in an economy like the United States, it's important to know, what is the average person doing? What is the average person in Janesville doing? What's the average person in White Fish Bay doing? What's the average person in any city in America doing? And how are they engaging with the economy? So we know that the unemployment rate soared in the middle of last year as we kind of shut down the economy. In fact, the unemployment rate soared faster than any time, including the Great Depression, We hit a level on the unemployment rate near 14% that has never been seen, even during some of the worst crises in our nation. That has come back to 6.7%. It has come back pretty fast. We're not back to where we were. Before 2020, we were in kind of a generational low for the unemployment rate. But I think we will get there. It's going to take us a while, but we will get back there. Retail sales is back to an all-time high. I'm a guy who focuses on retail sales. I know Mike was talking about that. One of the crazy things about the recession that we just went through is that in a typical recession, the sale of goods tends to fall and the sale of services tends to be flat or higher. And that makes sense, right? You don't buy cars and washing machines and big ticket items in a recession. You tend to retrench as a consumer. But the exact opposite happened in this recession. The sale of goods soared, absolutely soared in last year. And services fell because, we couldn't go to hotels and theme parks and we couldn't engage with restaurants and all that kind of service sector economy. I think that's going to unwind as 2021 evolves. The sales of goods will start to fall, but the sales of services will start to soar again. So retail sales, a measure of kind of all the sales in our nation, is back to an all-time high. That's a great start. Here's something, and I know this is going to sound crazy. It's entirely possible that the average consumer is in the best shape they have ever been, probably in history. Now, you got to be able to hold two things in your mind when I say that. Number one is that the average consumer is in a phenomenal shape, but that does not mean that there are people who are not in great shape. You can hold those two things in your mind at once, especially when thinking about the economy. And let me give you 3 data points before I kind of wrap up with my 2021 backdrop to emphasize what I'm trying to say here. Household debt service payments as a percentage of a household's income are at the lowest on record. Now, that's obvious. Interest rates are at historic lows. People have been refinancing. So the household payment that a person makes is at its lowest as a percentage of their income in history. I think about myself. I refinanced my home in Waipishpay with my wife. Our payment, just our principal and interest, is lower than we paid for an apartment in Chicago before we moved to Wisconsin in 2007. So I have a perfect example. Our household debt service payment is as low as it's ever been as a percentage of my income. Personal income, so the amount of personal income Americans took in last year soared on an annualized basis. It soared. Why did it soar? Because of the CARES Act. The CARES Act, my friends, was basically probably the most important piece of legislation passed in the past, half century in the United States. It was an absolute Band-Aid to the problem that we faced last year. It put money in people's pockets, enhanced unemployment benefits, kept the economy going. That's one of the reasons the stock market did so. Personal income absolutely soared in a recession. You never see that. Personal savings rates, the third of these, personal savings rates spiked like we've never seen in history because people were locked in their homes. They still had money. They were saving. So consumer balance sheets are in really, really, really good condition. And then factor in that we might be in probably the best housing market in decades, and I'm including the 05 to 08 period. The housing market in the U.S. is as strong as it's probably ever been. We basically have no homes for sale in the United States. If you were to look at total inventory for homes for sale in the U.S. kind of the beginning of this month, it was about 388,000, and that is the lowest basically on record. And January is typically a seasonally slow time to sell homes, but it's never been this low. There's less than 3 months of supply of homes in the United States. Consumers have built up equity in their home, a tremendous amount of home equity that they have not tapped, and mortgage debt outstanding has not risen commensurate with that amount of equity. The new loans being generated nowadays are of high quality, high FICO scores, and they're going primarily to 35 to 49-year-olds. Let me just give you the backdrop on 35 to let's say 25 to 40-year-olds. That's the millennial generation. That's the largest demographic bulge in the United States today. And they are all coming into the prime of their lives, all of them. Their career, their child raising, their family starting, home buying, consumption. The oldest millennial is 40 years old, and they're all coming into the prime of their lives. So here's the setup, I think, for 2021. Continue to see robust GDP growth kind of bouncing off that low. The estimates for GDP out there, and I've seen a lot from the Fed to major Wall Street banks of like the 4 to 5% nominal range, I think are way too low, absolutely way too low. I could see something in the realm of 8 to 10%. I think nominal GDP growth is going to absolutely soar this year. Employment growth continues to come back. We have crisis low levels of housing inventory and record low mortgage rates, thanks to the Fed, who is committed to low rates for the near term and possibly further. They're willing to let inflation run higher. Low household debt burdens, excess savings that I just mentioned to you, and a solid demographic backdrop. We have a demographics in the United States right now that puts a tailwind to not only housing, but to our economy. And these millennials have been stuck in their homes for the past year. I think they're going to all re-engage with the economy in a significant way as we continue to vaccinate. And I think that under the new administration, we have a new administration in power, there'll be less kind of policy uncertainty. And when I say policy uncertainty, I'm not saying I know exactly what the administration is going to do. I just think we'll just have less of kind of policy made at random times, on social media. I mean, there were times when I was a trader that, we engaged in a trade war and everybody found out about it on Twitter at the same time. And I just think there'll be less of that kind of uncertainty that can show up at any given moment. I think we might get a little more kind of deliberate changes to our policy. And I think that setup is there. Really, that setup is there for a really significant start to this decade. Let me just end on what I might be wrong about. I might be wrong. What if this explosive growth is really inflationary and the Fed kind of wavers on their commitment to low rates? If you looked at the previous bubbles, if you looked at all the previous bubbles, and whether the market's a bubble is another conversation. If you looked at all the previous kind of speculative moments in history, they all tended to pop when the Fed was hiking, either starting hiking or we're in the midst of hiking. You saw that at the end of 2018. We had a big market sell-off as the Fed started to hike. So I'm watching the Fed. All their language will be very important. And then and this might be important to Janesville, it might be important to Whitefish Bay or anywhere. Is the catastrophe in small business worse than I think? Is that kind of loss in income and spending power just going to cause my thoughts about growth to miss? And then it's entirely possible that we have a really good economy this year, and I'm right, and we see this kind of supernova of growth, but the stock market really does nothing. Remember, the stock market looks ahead. The stock market tends to price the future. All of these thoughts that I have are probably the same thoughts that the market has. So it's possible we see a year that's the exact opposite of last year, where the economy just surges and soars, but the stock market kind of goes nowhere. And then, as always, a risk to my projections, a risk to my thoughts about growth, or something that I can't see. I would argue that in the past 20 years, there's really only three things that kind of impacted the economy and the market in a way that nobody saw, and that was 9/11, the global financial crisis, and COVID. So it's usually something that we can't see, but I am extraordinarily excited about this year. I think that's going to be a great year for the economy. We're getting people vaccinated. That will ramp. Second half will probably be better than the first half. But that's kind of how I'm engaging with our clients and the media. On my blog, if you want to follow me on Twitter, Bull and Baird. I write a blog, Bull and Baird also. Feel free to reach out if you have any questions, and I'll stick around for any Q&A afterwards. So I appreciate the chance to speak.
Thank you so much, Michael, for that perspective. A lot to consider, isn't there, when you look at it, the low rates, the low cost of energy, the intergenerational changes with boomers passing along wealth. Now, there's a lot of factors here that bear observation and could impact 8 to 10%, though. My goodness, on GDP, that's something to write home about.
Yeah.
And I expect some of those dollars will find their way into the local Quick Trip. And up next, we have Steve Lair, who's the Vice President of Operations Support for Quick Trip. Of course, Quick Trip has multiple locations here in town, has been in the news for a couple of additional very large additions to their group of stores in the community. And I, as I mentioned early on, Steve is also the current chair of the WMC Board of Directors. So we welcome you, Steve, and give you the floor for a few minutes.
Yeah, good afternoon. It's great to be chatting with all of you this afternoon. Appreciate the opportunity to talk about Quick Trip. We currently operate in 4 states. Recent acquisition of the Stop and Go chain saw us get 2 new stores in Illinois. So that's our first two stores in that state. We have 750 stores today, now in Illinois, Wisconsin, Minnesota, and Iowa. We're a very vertically integrated company. We have our own distribution center, our own bakery, our own dairy, our own kitchens, and we currently have about 30,000 coworkers scattered in those 4 states. The impact of COVID was great in the convenience store industry. Fortunately, our industry was deemed an essential one, so we did not close down any stores during COVID. We did see some huge initial declines in both guest count and gas gallons, over 40% plus during the end of last March. But because of our vertical integration, it really helped us as consumers were finding shortages of things like milk and bread and consumables like that, commodities, that we could just crank out more milk in our dairy, more loaves of bread in our bakery, et cetera. And I had our shelves full during this whole time. Really helped grow our sales back rather quickly. And today we're near normal in both guest count and gas gallons, so we're thankful for that. There is a short-term and long-term impact, I think, of COVID, though, with will there be more people continuing to work from home? Probably. Schools in our area now are starting to reopen. Hopefully that'll be the norm again, that they'll be, open in the school systems and colleges and so forth. But what will the long-term impact be? Both Mikes talked about, consumers, online shopping. Certainly more people are using Amazon and other shopping services. That's probably going to continue. Home deliveries, drive-throughs at stores. Quick Trip is working on curbside pickup right now to make it easier for people just to pre-order and pull up, and we'll bring the product out to them. I think those will be some long-term things that continue on. Mike mentioned the big hit on especially the hospitality industry. A lot of our friends in the restaurant business, bar business, hotels and stuff, many of them were hurt a lot, and a great many of them will probably not reopen when this is over. What are some of the things that concern us going forward, I think, is jobs and education. I think Wisconsin, Janesville is not any different, I don't think, than the rest of the state. The biggest challenges we have, I think, is an adequate workforce going forward. Having our kids that graduate from high school and tech colleges be ready and equipped to go out into the workplace, and that we work hard to keep those kids and families in Wisconsin. We're trying to do that by encouraging having more internships, apprenticeships, and things like that at Quick Trip. I agree with both Mikes that the rest of this year is going to be pretty astounding. Quick Trip is very optimistic by our nature. Our owner has always looked forward and looked and saw opportunities rather than obstacles to business, and we're continuing to be very bullish about the future. I agree. I think there's a lot of pent-up demand out there. People just want to get out and have things return to normal, whatever that new normal, whatever that means. Our customers are looking forward to that. We're so optimistic that we're looking to build 50 new plus stores, 50 plus stores this next year. They'll be bigger, 2,000 to 3,000 square feet bigger than our current stores. We're committed to a lot of CapEx growth, and we're looking to add 3,000 plus coworkers during this next year, with more emphasis on food, chicken programs that we started, take-home meals, sit-down area in our new stores, et cetera. So I agree with both Mike's, and Coach Tripp was very, very bullish about the future economy in Wisconsin, in the Midwest especially. Thanks.
Well, thank you. I can tell you we already have some questions been submitted that I'll hold off until we've covered had all the panelists speak. But there are a number of questions that have come in about your plans going forward. Hold those and turn the floor over to Gail Price, the City of Janesville's Economic Development Director, and Gail will give us, I expect, a more of a localized perspective. Gail?
John, thank you. Appreciate being here today to speak to the membership. So when we think about 2021, it's really been set up by where we were at in 2020. And considering everything that had went on during the year, we really feel like we've finished in a positive light. And, when we think about as we move forward, we think that momentum's going to continue. So when we think about, I'm going to break this down to really kind of three areas: our housing development, our manufacturing, distribution, and retail. And so when we think about housing development, we've all heard the stories about how hot the housing market is, and certainly we have seen more permits issued in 2020 than since before General Motors. So we had 105 single and two-family permits last year with about almost $22 million worth of investment. We saw residential lots being platted that we have not seen again since 2007. And that high demand is really being driven by pent-up demand. We have people that are moving here for jobs that are being created by our local companies. And we've also seen, and we've seen this on a national level, where people are choosing to relocate out of the denser urban municipalities because they have some choices to telework. And I know of a couple instances where people have moved out of Chicago, moved to Janesville because there's an opportunity to live in a urban environment, but a smaller urban environment that they can enjoy. Even if, there's a pandemic, they can still go outside and walk on a sidewalk and go to a park and things like that. And we really think that momentum's going to continue, but there's a number of factors that are tied to that. And I think the number one factor there is the low interest rates. We've got to continue to have low interest rates to help drive those construction projects. The cost of construction of homes and apartments continues to go up, but certainly that is partially offset by these low interest rates. You look at how Janesville has recovered on the employment levels. In November, we were at 5% unemployment, so we're actually doing as good as anyone in the country. And that's going to help continue to bolster Janesville's growth and certainly stability as we move forward. Well, another factor on the housing side is construction labor availability, and that's been a challenge. We need our schools and tech schools that continue to train young men and women to build and those other trades that support the construction industry, and we hope that continues to happen. So right now we have scheduled 160 apartment units coming online for this year, and we have 57 that have already started that will be started later this year. That's the Glade, and then we know of additional units being built by Cedar Crest. So when we think about all that housing that's getting built, it's providing additional opportunities for people to sell, and maybe they want to downsize, or other opportunities for people to come into the market. And those are all very important. So extremely positive on the housing side. When we think about manufacturing, again, another decent year considering everything that had happened with the pandemic. One of the key pieces, though, is that we had a governor that said, hey, manufacturing is essential, and classified that group as essential, unlike some other states, that allowed our manufacturers to continue their operations. But we're also blessed with companies having the ability to pivot, change direction, do things that they needed to protect the employees, and that allowed them to continue their operations. And then other companies that were able to change to meet market demands and produce product that was necessary to help various other segments like the hospitals and healthcare with face shields and hand sanitizer and things like that. That's just, it says a lot about our manufacturing base here in Janesville, that they have the foresight and the ability to make those changes and continue to meet market demands. So that, really set us up for, continued growth in the manufacturing area. And when I look at 2021, I can use one word, and it could be epic. And we are in discussions on 9 potential industrial projects and 2 other expansions. So those are very promising, and some of that's being driven by the need for e-commerce facilities that are where other companies that have maybe brick and mortar stores are seeing a need to hit that market stronger. They don't have the facilities to do that, so how do they do that? So Janesville's geographic position relative to larger markets and the ability to make that distribution point from here to those markets is extremely important, and that's helping to drive many of these discussions that we are having on the industrial side. One of the things that's going to be challenging is land consumption, and that's going to be a tough balance, is how much land do we have available relative to market demand, and we're going to continue to look at that and position ourselves to hopefully continue this growth. And then, last is General Motors. We're continuing to work with CDC on that redevelopment. It's slower than what we would like, but certainly there's a lot of factors that are involved with working through the planning and those things that need to be done to facilitate new development on that site. So when we look at the last segment is retail, and nationally we keep hearing about how rough a year 2020 has been, and that's going to continue into 2021. And certainly we've seen our share of impacts there, but when we think about some of the smaller retailers, they've held their own. Our hospitality segment and especially dining has been hardest hit. Those are the main closures that we've seen here in Janesville, and there's probably going to be more, unfortunately. I think the community has done very well to rally around our restaurants, and especially those who have been able to shift more towards the carry-out kind of activity. And, we've seen additional interest in development. I think everyone's heard about Chick-fil-A and their desire to come here and their approvals. That's just another demonstration of how strong the market is, and certainly they as a company have fared well through the pandemic. We hear so much about how the Amazon factor affects retail, but one of the things that's probably bigger than Amazon is the fact that the taste and consumption level of the consumer has significantly changed. And, the retailing industry needs to continue to, further modify how it markets to, the consumer, and what does that look like. And, ultimately, I think there's going to be some adjustments and right-sizing of retail space that we have available. There are other retailers that have done quite well. You've probably read stories about how Home Depot and Menards and even maybe as our local Farm and Fleet have done better through the pandemic because people were cooped up at home and it was an opportunity to get projects done around the house. And certainly the grocery industry has done well because people were dining out less, so they make more meals at home. And I, for one, would much rather make fewer meals at home because I'm really tired of cooking. But, that's certainly as the vaccine rolls out, I think we'll see some of that decrease on the grocery side. But I think as we go forward, one of the things that when we look at countywide retail sales, and most of this is driven in Janesville because we are the regional retail hub, 2020 continued to be a banner year for sales tax revenues, and we continue to draw from outside the community for people to shop here, and we anticipate that continuing to happen. I don't think we're going to see a lot of space getting absorbed, but certainly I believe that our retail base that we have here is going to continue to, grow and be in a good position for long-term, growth and positioning. And we're seeing a lot of shift towards more neighborhood kind of oriented projects. So the Quick Trip projects really are focused on smaller areas that are more neighborhood oriented. And I think that's a positive thing, because when we think about livability of the community, you want to be able to have consumer choices within a walking distance of a neighborhood. And that's something that's somewhat of a factor of zoning, which that's a whole nother dissertation that we won't get into today, but certainly appreciate a company like Quick Trip and all of its offerings, and especially food offerings, as we look at that East Milwaukee Street corridor. That's going to just help backfill the loss of the Mauer's grocery store that was a key staple in the neighborhood. So, from my perspective, I think 2021 is going to be a great year for the city of Janesville, and that's going to be positive for not only Janesville, but for the rest of the county and the surrounding communities.
Well, thank you, Gail. That was really interesting. 9 prospects and 2 expansion projects. That's, as far as deal flow, that's about as much deal flow as I think I can recall in the 20 years I've been here. That's pretty remarkable. I have a number of questions now, and we'll go down that path. I know Michael Johns has to cut out a little early, so I may start with you, Michael. On the retail side, actually, I think I might throw this out not only to Michael, but also to Steve Lair, because he has a retail angle with Quick Trip. But there's a lot of talk about a $15 an hour wage on the federal level, and even amongst our membership, there are a variety of opinions about that. Obviously, as the labor shortages impacted their ability of businesses to hire labor, they were raising their wage rates before the pandemic, but it's still a situation that's in play. I'm wondering, Michael Johns, start with you. And do you see that as a major hurdle, a challenge within the whole retail sector?
Well, certainly the answer to those questions depends on which chair you're sitting in. But I guess many of the retailers that we see pay a wage that's typically higher than minimum wage. Certainly, when you consider the wage plus the value of the benefits. Now, there obviously will be some retailers that you will have margins compress if the wage goes up. I think depending upon which business school you went to, that's not necessarily a zero-sum game, because obviously there's more disposable income in the employees' pockets to then go spend on at other places, maybe even including their place of employment. So I know that there's arguments in favor and against all of that, but I would say that right now is not the main focus of most of the retailers that I speak with. The bigger focus is really on some of the factors, like I noted, in terms of how many stores are indeed going to be reopened. You can afford to pay employees more at a store that has higher throughput and makes more profits to begin with. And frankly, with buy online, pick up in store, and even direct to consumer shipping, I think we see employees in many places of business, places of business now moving to a broader scope of responsibilities. Not only are they there to simply mind the store, they're there to provide more information to the customer while they're shopping in the store. They're there to handle returns from items that might have been ordered online. They're there to pick the store and bag the item and have it ready for buy online, pick up in store. So to some degree, there's multiple factors at play beyond just simply the wage. What are you using the employees for? What are their scope of responsibilities? How valuable or how much unit volume is that particular store going to do post-pandemic versus what it was doing before? If you wind up with half your store base but twice the unit volume, you may very well be more than happy to have remaining employees at $15 an hour versus some other number, because it makes economic sense.
Yeah, I can comment on that too. This is Steve. I mean, we feel very strongly about that wages shouldn't be mandated by either state or federal government. That certainly should be market driven. Having said that, our Quick Trip coworkers at retail, I think their average wage this last year was nearly $14 before any benefits, or we share 40% of our pre-tax profit with our coworkers at the end of the year, and have the lowest turnover of any retail company that I know of. We paid our coworkers a $2 an hour bonus during 14 weeks of the COVID crisis, not because we were mandated from the government to do that, but because we thought it was the right thing to do. I think the wage should certainly be market driven, not mandated.
Okay, thank you for that. I'm going to guess we're going to hear a lot more about the federal proposal at 15 in the coming weeks and months. Michael Antonelli, I have a couple of questions here. I'll throw them both out. Do you think the next stimulus package, which is being talked about in the $2 trillion category, might be a concern in that it stokes inflation? Similarly, another question along the same lines, what are your thoughts on the long-term inflationary risk of a whole lot of borrowing that's going on?
Yeah, so here's the thing about that is it's a question that gets asked of me quite often, especially in events, both with our wealth management clients and with institutional clients. And inflation always seems to be on most people's minds. And for the longest time, I really couldn't understand why, until I finally kind of sat down and thought to myself, we're all a product of kind of when we grow up. And, that has interesting, connotations for both how we view the world and how we view investing. I think if you were in the 70s, if you say you were in your 20s in the 1970s, you saw a really terrible time of high inflation and the market kind of grinding and a lot of supply shocks and oil and just a tough period. I'm 46 years old. I have never seen high inflation in my life, especially as I became an adult. So to me, high inflation doesn't seem like something that I should be preparing for or worried about. So let me just give you my 2 cents on inflation. There is no one up into including the Federal Reserve who understands what causes inflation. We really do not know. We printed 16% of GDP last year in stimulus, and CPI, I know some people might not think CPI is the best measure, but if you were to use CPI as your measure of inflation, it is still below 2%, and we printed trillions and trillions of dollars. So here's the thing about really bad hyperinflationary events in history. And I am a history undergrad from Purdue and a finance grad from Chicago, so I got a little bit of kind of the best of both worlds here when it comes to talking about markets and what's happened in the past. Most of the major hyperinflationary events in history have come about from kind of 3 things: wars, regime changes, and some kind of output destruction in a nation. If you were to think about the Weimar Republic at the end of World War I, they suffered kind of all three. But those are the things that really cause really hyperinflationary spirals in currencies. Money printing of dollars for things like stimulus and what we saw last year have not been generally associated with hyperinflationary events. So unless the United States is going to change from a democracy to something else, which I hope we don't, inflation to me isn't something to worry about on the notion of printing money for stimulus. Luckily, the United States prints the world's reserve currency, and the world stores its value in the U.S. dollar. So as long as our regimes don't change, as long as we don't have some sort of war that destroys the output of this nation, I think that will continue into the future. I don't worry per se about inflation, certainly not a hyperinflationary event. Is the chance that we see inflation rise this year? Yes. And I'd love to hear, thoughts from this panel, especially someone like Steve, who probably sees this a lot. Do I think that the odds that inflation jumps this year are higher than they have been in the past? Yes, because I think consumers are going to explode out of their homes and want to consume, airplane tickets and hotel rooms and vacations and, think of all the quick trips. They're going to leave their homes in cars and they're going to stop at quick trips and they're going to demand, food and gas and all these things as they travel to places that they haven't been able to. I think the chances are that inflation does perk up, but I don't see inflation as an issue that an investor would need to worry about over the near term. I really don't. Nobody really understands what causes inflation, and money printing has not been shown to cause a surge in inflation. It just has not happened in history. Remember, we print the world's reserve currency, and remember, there's probably inflation in college education, and there's inflation in medical bills. But, when I used to go to Blockbuster Video as a kid, I used to get a movie for $8. Now for $12 a month, I get 50,000 movies on Netflix. Technology exists to kind of sap inflation. There are pockets of the world that do have inflation. I just don't think that stimulus and money printing are going to cause some sort of hyperinflationary or superinflationary episode. So that's kind of my take on it.
Yeah, there's some interesting things happening with certain product categories. Even gasoline. I'm one of those people who grew up in the 70s when the oil shock and everything, and I was paying $1.20 a gallon back in the 70s. So the real price of gas, of course, is lower now. You can go to Quick Trip and buy, I think, bananas for 49 cents a pound. I mean, it's just incredible how cheap they are. Steve, he challenged you to pipe in on this. Perhaps you have a perspective to share?
Yeah, I think I agree with Michael. I mean, there's going to be inflationary pressures because, it really can't go, it can't get much lower than it is. So, the only place it can go is up. But, and we're going to see some individual categories where it's going to impact things more than others. But we think it's certainly, inflation is certainly manageable for the near and even, short and fairly long term, that inflation is going to be relatively low versus some of the examples we gave of, things we saw in the 70s and 80s and so forth. So it's not something that we worry about. Commodity prices at Quick Trip, fuel, of course, and other things, but I don't think inflation is going to play a big role in the next 3 to 5 years.
All right. I want Steve for you to put on your WMC board chair hat, and I'm going to mix it up with Gail. Perhaps, Gail, you can start, but we've heard the mention of workforce shortages, labor concerns, whether it's the people that need to build those houses, the people we talk to manufacturers all the time, and they're pulling their hair out trying to find people that match up with the needs that they have. Perhaps, Gail, you can start by talking about that challenge here locally. What's your bead on the workforce development issue?
Yeah, so when we talk to a prospect, almost always the first point of conversation isn't about, the land that we're talking about or utilities. It's always talking out of the box about labor availability and what is available here in Janesville and where are we drawing our labor from. And that is something that James Otterstein and myself continually track. That is a data point that we're always have ready and available for that conversation, because it is always the beginning point of the conversation. And we are lucky here to have educational partners in the Janesville School District and Blackhawk Tech and UW Whitewater or Rock County. All three of them have really listened to those needs and been open to the conversation. And in fact, promoting that there are good jobs available without, maybe going to the 4-year college. Maybe it's 2 years. So, or just some other technical training through, IEBW or something like that. And that's just very important, because it continues to position ourselves to grow those segments of the economy and to, really continue our diversification. And that's been a very important piece of how Janesville has grown over the last 15 years. And, without that labor, we're not going to be able to continue to feed the machine. And, certainly I had a conversation with a freelance reporter yesterday about where Janesville is at and some of the other things going on nationally in the economy. And I have friends in Ohio that are in the manufacturing realm, and they've been out of work for 6 months. And, I'd love to bring them here so they could get to work, because we do have those opportunities. And the more that we continue to help develop that labor, it's going to continue to meet the needs of the manufacturers here in the community and other segments of the economy.
I have a suspicion this challenge is not going to go away. If you could pipe in, I know it's a topic of conversation at the WMC Board of Directors. Perhaps you could share that perspective for us.
Very much so. I mean, I think the workforce shortages is a real thing. I think we've got a lot going for us in Wisconsin. I think we have that real Midwestern roll up your sleeve work ethic kind of thing going for our folks in our state. And I know at WMC they're working on a report. We just had a meeting this morning, actually. What are the challenges and things going forward to the year 2035? What are the big issues? And a lot of it revolves around workforce. We need to have a planned effort for talent recruitment to bring people from other parts of the country to Wisconsin. Somebody mentioned earlier on the call, somebody from Illinois, moving up to Janesville. We recruited someone for a position. They came from Ohio, and she was really shocked when she came to La Crosse and saw the natural beauty and everything that we have to offer in our state. I mean, I think we need to promote the state of Wisconsin. We need to have the state of Wisconsin government help in talent recruitment to bring talent in our state, and then we need to really work hard to make sure our tech schools and our other schools are turning out people that are capable of joining the workforce, and that we work hard and have programs to keep them in Wisconsin too. We're looking at really beefing up our internship program, apprenticeship programs, things like that to keep those folks in Wisconsin. So workforce is a big issue.
Well, thank you, Steve. I know, Michael Johns, you have to scoot a little early. Do you have any final parting thought for our membership?
Well, I guess my only comment would be, there's a lot of talk about potentially excess real estate in retail, which I think was one of the topics we talked about last time I was able to be on one of the panels here, and I would say that we are continuing to see some very innovative and creative things being done by landlords, by mall owners in particular, as it relates to converting what was once traditional retail space into something that is more entertainment and service oriented. There's even talks of converting some into sort of last mile depots or places for further distribution of e-commerce items. So I guess my only thought there would be that while the headlines may be sensational, I think that what continues to be consistent is the American dream and American entrepreneurs being very innovative and always looking for ways to be creative and change when situations and conditions dictate. So I guess my parting would be that I think we're on the precipice of a brave new world in both retail and sort of mixed use properties that were once only retail or only industrial, and that should wind up benefiting many communities. I would think Janesville included, as I think things continue to change. You guys have space, which is not available in a lot of different places. People are looking for that these days. And so the more that Janesville continues to innovate and change its real estate to accommodate those changing needs and desires of its community and people that might want to look to move to the community, I think the future is pretty bright for a lot of those things.
Well, thank you, Michael. I know you have to jump off, and I appreciate you joining us today, and we'll look forward to talking to you again in the future. Michael Antonelli, you've told us to be bullish on the economy, or that you are, and that we might join you in that thinking. Savings rates spiking, personal income soaring, GDP as high as 8 to 10%, and you advised us to watch the Fed. Anything else you want to add to that list?
Yeah, I appreciate the opportunity to speak to you guys. I love the chance to kind of develop a relationship with not only our clients, but with the communities that they belong to. And Janesville has always been really good to me as an employee of Baird. So I thank you. I am at heart an optimist. I always have been. I don't think that pessimism is the right stance to ever take. When I think about all the successful people in the world, all the entrepreneurs, think about the people who started Quick Trip. Think about the people who started Janesville. They didn't show up to a place and say, I can't make this work. This seems bad. They stopped and they said, I'm going to make this work right here, right now. I have an optimism about the future. And that kind of guides my thought process on both the market and the economy. Now, that doesn't mean that I think that the world's peachy and everything's great and you should always just be dancing through the tulips. I always tell our clients, save like a pessimist, but invest like an optimist, which means that in the short run, acknowledge that things can really go bad. Things can go haywire. And they will from time to time. They absolutely will. That shouldn't stop you from investing like an optimist, because what you're trying to benefit in here is the long run growth of our nation and its stock market. You're acknowledging that the world breaks all the time, but that does not preclude you from benefiting in the long-term growth of this nation and its economy. I think that the past year has been very difficult on a lot of people. There was no way to know what was going to happen in 2020, not only from social unrest to the pandemic to an election. Nobody can predict the future. Just acknowledge that the world in the short run can really go haywire from time to time. But I think that the table is set for above average growth coming out of this pandemic. Just to kind of lean into history one last time, the Roaring 20s happened after the Spanish flu and after World War I. So the setup was there for people to finally kind of explode out of their homes and into the economy. I just hope that this time they don't bring back prohibition. So thank you guys so much.
Thank you, Michael, for joining us. Steve, we have 1 minute. You have a parting thought maybe that you'd like to share.
No, I guess I just want to encourage everybody that's on the call to there's with challenging times, it creates opportunities for all of us in business, and to stick to it. I think we've got a lot of great things going for us living where we live in the state of Wisconsin, and I think the second half of 2021 and going forward into 2022 is going to be great for all of us that are in business, and we appreciate all the support everybody in the community in Janesville gives Quick Trip, and we're looking forward to give a lot back to the community over the years to come as well. Thanks for having me on the call.
Thanks, Steve, and thank you for Quick Trip being a supporter of Forward Janesville. We appreciate that. Gail, I'm going to give you 30 seconds because we're out of time, but if there's a comment you'd like to make, please share it quickly.
I think it's going to be a great 2021, and just a follow-up on Mike's comment about prohibition. I don't think that's going to happen in the city of Janesville because the city council dropped the liquor license quota last night. So
let's go.
Well, that's something we can all toast to, I guess. Thank you all for joining us. We really appreciate your time and your expertise and your perspective. To all the members, thanks for joining us, and stay tuned. We'll assemble another outstanding panel in the near future, and have a good day. Thanks.